Hey everyone, welcome to another video. I'm back. Sorry for the absence for a little bit. I decided to take some time off. I've been working so much for the last almost maybe 3 years, and I realized that trading, my life began to revolve around trading, and so I needed to create some balance so that I incorporated trading into the life that I want instead of making my life revolve around trading in itself. So anyways, we're back. So today what I'm basically doing is I'm doing a trade recap on Euro US dollar um, on the London session last night. So I came back, my first day trading back was August 1st, August 2nd. So we're starting off the month great. We already started the first day trading back 20R. This was a very simple setup, so I'm actually going to go through my markups as how I did them, and I'm also going to go over the actual trade recap so you can see what I did and how I captured that trade. Give me 1 second, I'm going to pause it and I'll come right back. Okay, so here we are. We're in the Discord. Now, if you're wondering, this is my forever free Discord. We have over 700 members. It's grown quite fast. I took some weeks off, but I'm back. I basically upload all my trading outlooks and how I trade, some tips, some videos, stuff that doesn't make it on YouTube because it's less refined and it's a little bit shorter, so it's easier to digest the information on here. So anyways, these were my markups from yesterday. So here looking at the daily time frame, taking a look at the 4-hour markups, kind of the levels that I was looking at, you're going to see that this is the level we traded off of. And then my 15 minutes with my explanations, you can see this is the POI that we are going to be trading off of in this trade recap. And you can also see my simplified outlook. I try to do those for some people because sometimes it can be a little bit confusing. Let's get back to the actual chart. I'm going to show you the setup. Alright, so starting from scratch, one thing that I basically was looking for is, without having to go on the daily time frame, make things complicated, what we're trying to understand is what is the current swing, right? So at this current moment, this is what price was basically doing. Now, we're on bar replay mode, so the price action of the trade hasn't occurred yet, right? But what I'm trying to do is I'm looking to the left, because what happens is once we surpass this internal high here, right, we created this pullback, we're pushing back up. This is the swing that led to the downside, right? And so what I'm looking for is anything that price can create reactions to. So if I'm looking to the left, for example, I do see that we have this buy to sell engulfing, right? And so I can go ahead and say that we have a big supply zone here on the 4-hour time frame. Now, we have a large imbalance that we want to fill, so there's a big gap in here. And so more than likely, price will have to come back to trade into this level, right? Now, what that also means is that anything that's currently below this level, a POI, is not going to be the highest probability, in my opinion, as these levels will be more of reaction points. We can expect a reaction, a strong pullback to result from these areas, but not a complete overall reversal of price. And usually because there's a much bigger imbalance above, and therefore this is only going to serve potentially as, in most cases, it's going to serve as a pullback before it gets taken out for the actual point of interest that's above, right? So this is a reaction zone that I was looking for. Bless you, my dog sneezed. You can go ahead, bless you. This would be the entire point of interest. Now in my case, bless you, Valentina. In my case, this is the area that I'm focusing on, right? Now the interesting thing here is that we do have lots of liquidity resting just below that POI. So it would make sense for price to sweep this liquidity, tap into this, and potentially generate an aggressive enough pullback, right? Now, we don't exactly know what's going to happen. We don't make predictions. We make judgments based off reactions, right? So what I want to look for example, in this case is, as price was bearish in this point, leading to this downside, making this peak low, this would be the very lowest low, right? After that, you can see that price began to pull back. And so what I want to know is what caused this pullback, or what was the point where we decided to shift from bearish to bullish order flow, right? And so what I can see is what created this low. If I look to the left and look higher, we basically had this high. And so before that happened, right, we made this low, we pulled back, we swing lots of bearish candles on the 4-hour, made this low, we pulled back, created a 4-hour change of character, right, to shift bullish. And then what we see is price failed to hold. And you can see that we swept, barely by anything, but nonetheless, this is considered a sweep of less than 2 pips. And we took that low, and then we made a new internal high. And so now what we've had is a secondary change of character, right? So we took the low, we took the high, but then what we see is we observed that this actually failed to hold, and we made this low. This now, in hindsight, it's very easy to see, right? Now, this was previous data from July 14th, so we already saw this, right? But this low ended up being the reversal point for creating that pullback. And so the way that I see it here is that this was the low that was taken. Let's mark this properly here. So 4-hour, right? And then this high was responsible for creating that low. And this is where we created a 4-hour change of character, right? So this high, we took the low, and then we took that high. And so now this is a 4-hour range that broke to the upside, right? And this shifted order flow bullish. Now, looking at this area, whenever I'm looking at a range, right? In this case, it's a sell to buy range. We can look at it like this if it's helpful for some of you to see this. And what I want to pay attention to is points of interest that are at extreme points, that swept liquidity, or that are responsible for flipping and breaking the actual range, right? And so while I'm looking at this, I can go ahead and start from the bottom. Down here, I do not see much action. We have lots of wicks basically stacking sell orders before we sweep the lows and we pull back. Now, when we pull back, this might be a V-shaped recovery on a lower time frame, but it's not very aggressive. We didn't directly get an engulfing candle to the upside. But what I do see, if I look a little bit further up here, I do see that here we have what looks like a liquidity point of interest. So we swept liquidity, right, mitigated something to the left on a lower time frame, and then we have an engulfing candle to the upside. Very strong, full body candle. We do have a pullback. In this case, this pullback fails to mitigate the actual point of interest, leaving behind a small gap, right, but does mitigate the range, the sell to buy range, right? We can say that the sell to buy range is like that, right? And then what do? We push a little bit higher in price. Here we have a final interaction with the supply to the left before we pull back and we break the range. And so we could go ahead and say that we have 2 demand zones. And in this case, one of them will be well priced. The other one is not well priced, but it is valid as it is the one that specifically broke the range. It's a flip and it's a strong point of interest, right? So let's go ahead and mark it like this. So these were 2 4-hour zones that I was looking at, right? In this case here, we generated a reaction. And so for the trading session, what we want to know is what's happening in this leg. Are we going to have continuation of this 4-hour, or are we going to begin to pull back and retrace? Now, one thing that I see here is, price, when we reacted to this 4-hour zone, gave a sell to buy engulfing that was very impulsive. Price pulled back, mitigated the extreme, and then created a new 4-hour high. And so if we decided to mark these ranges off, right, we could go ahead and say, for example, following 4-hour order flow, we would say here, we took that high. Right now, in this case, we didn't break and close on a lot of these, but because we are taking the highs, even with a wick, we are still taking out a lot of those levels. And so that's still a sign that order flow is shifting bullish, even if it has some sort of weakness behind it or some sell orders are stacking. As long as the wick is, if the wick is left behind, but we still fail to change character or break structure that's considered strong, we're still holding, right? Now, in this case, for example, the 4-hour points of interest that I was looking at, we would have this 4-hour sell to buy engulfing. Price came back in, took that high. What's the 4-hour point of interest? We could go ahead and say this inside bar plus that extra wick there. So this was the 4-hour that I was looking at. At the same time, what do we have? This high, we pull back, we take that high. We could go ahead and say that we have this as the 4-hour point of interest. In my mind, basically what I did is I focused on this portion that was unmitigated, And then what I also wanted to pay attention to is if I look in a little bit closer here, I can see that this high was specifically broken with a body. And so the question is, what flipped and broke that range? In this case, for example, here we have this high. We pull back. You can see that this wick actually sweeps liquidity before pushing to make new highs. And so what I did here is I decided to focus on this area and the unmitigated portion. As price pulled back into this level, then the area that I specifically wanted to focus on was going to be this area here, right? So this would be sell to buy wicks that broke, right? The 4 hour. So these are two 4 hour points of interest. Now, here's the way that I'm thinking about it, right? Price was pretty impulsive and aggressive pushing up to make new highs, but what we can see is that we're slowly starting to show some weakness, right? So these the sell candles, the doji is showing some indecision here. This inside bar still pushes up. Once we tap into this 4 hour zone, I'm not expecting it to completely reverse price, but what I am expecting is at the minimum some sort of reaction, because this is an area where we created continuation and we did engulf to the downside. We do have lots of liquidity below this POI, and so at the very minimum I can expect to see some sort of reaction here, right? And so when I see that a 4 hour supply zone is tapped, one second here. When I see that a 4 hour zone supply zone is tapped, I'm no longer looking for buys on the 15-minute. And so what I'm looking for more than anything is to see if that supply zone is going to hold or if it's going to be violated. If it gets violated, then I can go ahead and look for buys. But until that happens, I shift my bias a little bit because I'm aware that there could be some impending orders entering the market. So anyways, these would basically be the points of interest that I was looking at as the same that were basically marked out in my 4 hour markups here. You can go ahead and see I have the same one and the same one. Same exact way that we did it. This is the 4 hour, not a supply range, but reaction, right? If we look at a little bit lower, I have some other stuff that I added on here, but let's get back to this chart. So that's the 4 hour markups. So let's go ahead and save these as 4 hour. Just gonna group them together and we'll head to the 15-minute. All right, so now what I'm basically looking for is as my session begins, what I want to know is what are the 15-minute POIs that I can either look for reactions to or for places to basically strong 15-minute zones, right? And so what we can see is that the 4 hour basically was creating sell to buys. We're taking the highs. It's demand ranges, right? So we're creating some demand ranges. Now, the most recent demand range that I could say that we created was this one, right? So this is the demand range that was most recent, if this is helpful to mark it out as such, right? And now the question is, my best quality points of interests are always going to be inside of the range. They're not going to be outside of the range. Now, in some cases they will, but they're not going to be the highest quality points of interest. And the reason why is because in the high probability zones are going to be responsible for breaking out of ranges, right? Or for sweeping liquidity and then breaking out, right? If it's outside the range, it's usually going to be used as engineered liquidity, right? So anyways, once I'm here, this is my current 4 hour range. So anything prior, I'm not really looking at trading unless price really comes down to there, but I'm expecting order flow to continue. And so the way that I look at this is I'm looking at this very bottom here, and here it's a little bit complicated. If I wanted to find where the 15-minute change of character occurred, I could argue that maybe this inside bar, we made this low, there's a little gap in here, so it's a good pullback before continuing. I could go ahead and assume that this could be a 15-minute change of character. Now, because it's not very clear, what I'm going to do is I'm going to instead focus on the actual ranges, the demand ranges that were left behind. So when we made this high, you can see that we took that high, we pulled back, made this extreme, took that high. Right now we took it with a wick, so it's not super strong, but we did eventually close with a body after that. And so all we need is the wicks, the new wicks to get taken with a body, and that did happen here, right? Price makes this high before we create a pullback. Here we create a pullback, takes liquidity, and then breaks out of the range. We make this high as well, a new high on the 15 minute. Then we create a pullback, and then from this pullback we sweep liquidity, and then we break that top of the range, and here we break on an actual body, right? Anytime we break on a body directly, I view them as high probability ranges. That's something from my supply and demand video, and I do recommend that you watch that video if you haven't. It's a really good one. There's a lot of rules in there that I think simplify trading. So the way that I can look at this is like, okay, now that I have my 15-minute ranges, I understand what areas are going to be responsible for creating breaks, where there's going to be some liquidity, some high quality points of interest. But I also see that we have two 4-hour zones, 4-hour demand zones that I could very easily clean up and clarify with some 15-minute POIs. Now, anything in here, the way that I see it is because this happened after the range, any liquidity that is formed during this period is going to be used as engineered liquidity for a pullback into the range, right? And so what I see is here we broke out of the range. Anything after that outside of this box is something that I could be focusing on. Now, one thing that I like here is that I do see that we have equal lows, right? And in this case, we have inside of the range. So this is in range inducement before we broke out of this demand range. And we also have outside of the range, we have equal lows, right? So we have some liquidity built there. Price then pushes up higher. You can see that we are continuing those 15-minute ranges, but these are outside as well. So I'm just keeping that in mind. Let's mark this as well. Add that here. And then once we take out this level, we can go ahead and say that we have a change of character, because this is a sell to buy that makes a high. When this fails, you can say that this gives you the change of character. Now at the same time, I like using extremes in a lot of cases for breaks. So this is what I would really want to see before to shift price bearish, right? Now in here for the 15-minute POIs that I was looking for, I'm going to start at the bottom down here. So in here, for example, I can see that here we have the first engulfing sell to buy engulfing wicks, right? Somewhat price came back into them to tap, and then we push back up. Here we have a flip, and then we create a break of that 15-minute range with wicks. And so the way that I see it is I could go ahead and use this extreme as a 15-minute zone inside of the 4-hour. I can go ahead and label this as the first point of liquidity inside of the range. So liquidity, first point of liquidity, right here, right? So this has inducement for this 15-minute POI. So 15-minute visible inducement, right? At the same time here we have, this looks like this swept some liquidity. So this took some liquidity. Where is my sweep tool? Here. Awesome. Now, in this case, for example, we have this extreme, created this push to the upside. We gave it a reaction, a flip to this extreme here on this 15-minute time frame. All of these are reactions that are very valid and important to keep in mind. We created a flip that took some liquidity, right? Price then created a reaction to this level. So price tapped once, changed character, fake change of character, a failed change of character, and then took that point, swept that liquidity again, right, before continuing to the upside here. So here we swept liquidity, so another liquidity point of interest. And then this one directly pushed up, same thing, we kind of tested those highs, created a flip of some kind, right? Let's mark this out properly. We gave a reaction, we took some liquidity, and then we broke the range. So this area specifically flipped and it broke the range. Could be a good point of inducement, and this is inside the range, so this is also a first point of liquidity. What did I accidentally click on here? I don't know how I did that. Oops. Let's go back and just manually do this. First point of liquidity, and we also have equal lows. Alright, so in this 4-hour, I have a very clean 15-minute, what looks like almost like a doji candle, 15-minute point of interest. And so at the current moment, these are the only points of interest inside of the range. Right now, I could go ahead and also look for potential extremes in here somewhere, look for the wicks, and possibly consider maybe even, for example, something here, considering that we have some relatively equal lows. Liquidity, a structural inducement here that we could use, but this would be a less likely scenario. In this case, both of these points of interest are inside of a 4-hour zone. And so there's a much higher probability of these points of interest working. So in this case, for example, 15-minute and 4-hour is bullish, right? We made this new high, but we did tap a 4-hour supply zone or reaction zone. And so my question is, okay, if the 15-minute changes character, then what I want to look for is a strong 4-hour 15-minute point of interest to possibly give me a change of character to create some pullback, right? Now, in this case, because the 4-hour is stronger than the 15-minute, and we also see that the 15-minute is starting to slow down, the 4-hour is starting to slow down, it's very likely that price could create a flip and then fail and then continue for lower pricing until we get to another level before we break out from this reaction point. And so I'm going to go ahead and do bar replay. Now we have our 2 points of interest, and I'm going to show you exactly what trade I took, right? So first thing that I'm always going to do, let's see, bar replay, there we go. It's a little slow. All right, so one thing that I'm doing here is that I'm going to be basically watching price on the 15-minute. And the reason why is because at this current moment, what I'm looking for is I don't have any clean points, any clean points of interest. This went totally without me. Hold on here. Let's go back a second here. This bar replay is a little bit funky sometimes. All right, let's go back to here. One more. Let's go here. Okay. Giving that moment to load. Awesome. All right, so now what I'm looking for here, for example, is 15-minute created a change of character and a break of structure. This was a strong 15-minute low, right? So in this case, for example, I can look at this a couple different ways, right? For example, here we have a demand zone that was responsible for creating a new high, external, right? And then the expectation was to make a new high, right? In this case, what I do see is that price created a peak here, and this was a reaction point to the 4-hour zone above. Hold on, what happened here? Bar replay isn't available. What happened? All right, give me 1 second to see what's going on here. All right, I guess it's back. Okay, so dramatic, this thing. All right, so this is the extreme. At this current moment, now that we've broken 15-minute structure, what I do see is that, well, we have some liquidity for sweeping here that we could go ahead and take out. Price could potentially, create some engineered liquidity, tap, and then continue to the downside. So that's a possible scenario. At the same time, I could also see that inside here, we do have a potential supply range that caused the first engulfing, buy to sell engulfing. This engulfed that range and broke to the downside, broke 15-minute structure. In here on the 15-minute, there's no clean points of interest that I'm looking at. So what I'm basically going to do is I'm going to look for any time that I can get a reaction to something. Now, in here, these are outside of the range. So this is what caused the breakout of the range. After that, what we're basically doing is we're generating liquidity potentially for a pullback. Now, in this case, if you remember, we have 4-hour point of interest, 4-hour, 2 15-minute POIs, and so I'm really not interested in buying when the 15-minute is bearish, unless I can get a good signal from a 4-hour point of interest. Now, a 4-hour point of interest would make me needing to wait for a 15-minute change of character or a 5-minute change of character, right? But if I refine the 4-hour to a 15-minute like I did here, all I need, considering that I already have inducement for my POI, it's the extreme of the 15-minute. This is a sell to buy that directly broke structure on the 4-hour. And so the way that I see this is a very high probability point of interest. 4-hour refined 15-minute with equal lows has the first point of liquidity, and it is the extreme of the swing that directly broke the 4-hour structure. And so in my mind, I'm waiting until this gets tapped. So I don't really need to drop to lower time frames until we actually tap it. Now for the sake of bar replay, because it's so accelerated, I'm gonna have to go to lower time frames, right? Let's go lower. We're doing okay, a little bit back from there. Let's go back right here. And what we're going to do is I'm going to show you my thought process on the 1 minute time frame. So once the 15-minute POI gets tapped, here's what I'm looking for. Now, if we look back at my markups, for example, the next update that I had after that is a point of interest that I was looking for potentially for shorts. So at this moment, 15-minute is bearish. So I can take shorts until a demand zone is tapped. Now the demand zone below here had not been tapped at that moment. So at this current moment, what I'm seeing here is that there is that potential to continue lower. Now, for example, here, we took this low, right? And then at this moment, this is basically protected, right? So as long as this doesn't get taken, order flow is still bearish. Here you can see that we are creating 1 minute buy to sell ranges that continue to break. Price came in for a sizable pullback, tested the extreme here, right? And in this case, what we have here is, here we have what looks like a doji candle, right? And here what we do have is this low right here. This would create a change of character. So for example, this is a pullback, a sell to buy, makes this internal high, taps the extreme. Here we have a buy to sell engulfing candle. So we've created a supply zone here. The first engulfing candle as a reaction there, right? In this case, now we have a 1 minute change of character when this goes. And here I can see that this was engulfing to the downside, left behind imbalance. So I was ready to take shorts if this point of interest got tapped, right? So this is an unmitigated 1 minute POI. And I would be very happy to take any short from here to this point of interest. Now, if this isn't tapped, the way that I see this is that's an unmitigated point of interest, and price will need to pursue to fulfill this doji candle inside bar that is unmitigated, that directly broke structure and changed character, right? You can see here that the sell candle, we have 1, we have 2, and we wicked below, changed character directly. So this is responsible for the breakout of this and the change of the 1 minute change of character. So anyways, let's keep focusing, bar replay here, waiting for the 1 minute to get tapped. 1 second. All right, I'm back. Sorry about that phone call. Making plans to go to the zoo, so I have a couple minutes to finish my video here. Okay. So here's where we're at. So currently this is the most recent swing to the downside, right? And the way that I see this here is that here we have created a range. This is a supply range, right? Supply, it broke to the downside. Let's go ahead and mark this as such. Supply range. Awesome. So in my mind, the way I see this is a buy to sell that created the tap of the point of interest. So this POI directly responsible for creating the tap of the 15-minute refined 4-hour. So at this moment, for me to see a 1 minute change of character, I have to be patient and see this go. Now, if this does not go on the 1 minute, then I'm not interested in taking longs. And so a lot of people are going to be on here on the 5 second, 15 second trying to take trades. And you know, that might be your method. My method, I have specific rules that I'm looking for, and I need to see that go. Now here, while it might be very tight, you can see that we did pierce that 1 minute, high. So buy to sell makes that low. 1 minute changed character. Awesome. So here's what I'm looking at now. Directly, we came into this 15-minute. Now we came in for a deep mitigation. If we were at a surface level mitigation, tap of the top, I'd look for a liquidation. Now, we already know we have equal lows to the left, right? So we have lots of liquidity that we could sweep over here if it loads. There we go. Equal lows, right? 15-minute point of interest. Now we have a 1 minute change of character. So here's the way that I'm seeing this. 1 minute change character, we have this low to this high. I am now looking for a point of interest below the 50%. I want it to be well priced. Now in my mind, the way that I see this is we only have one sell candle before we take the high. And so we have 1, 2, 3, and we take that high 1 minute candles. And so in my mind, the only point of interest that I see is here. I'm not waiting for price to return to the halfway mark. I'm not waiting for anything except my 1 minute point of interest to get tapped, right? So that's my 1 minute point of interest. This did deliver a V-shaped recovery that directly caused a change of character. So that gives me a higher level of confidence in a potential setup. So now I'm going to be patient. At this moment, I have no inducement for this POI, right? But it is possible that it will hold on its own. So what I want to see is some generation of liquidity. So even if it's structural or equal lows, let's see how this goes. All right, price is coming into the 50% level. POI is not tapped. All right, let's be patient here. All right, here's what we're looking at now. Now what we've done is we've created a 1 minute order flow range here. So let's mark this as the proper one, 1 minute. There we go. All right, so now what do we have? In most cases, when we see something like this, for example, we tap, we get a V-shaped recovery, the POI doesn't have any inducement. What do we have? We create structural inducement so that when price comes back down, what happens? We sweep that point of liquidity, we give a change of character, and then we take off. And so the way that I see this now is we've just generated a point of structural liquidity. All right, so now we have inducement for the 1 minute. It gives me a higher level of confidence that this potentially might hold. Now here's the thing. I do have supply zones up here, and so if this gets tapped, because this is part of the range that broke to the downside, I'll be very cautious, because if this gets tapped, it's very likely that we could very much take out my actual setup. And so I'm very cautious. For example, if I take this range here, I really don't want to see price come into these supply zones, right? By the way, the same thing as we saw down here. This would be a first point of liquidity. This would be outside the range, but this is the inducement, structural inducement for this POI, right? So let's continue here. So I'm waiting for my 1 minute to get tapped. Not yet. All right, so now we've generated relatively equal lows, right? We have more inducement for this POI, and then we might have to drop to the seconds. All right, so if my POI gets tapped, I drop to the 15 seconds. Now for the sake of this, because there's multiple candles, and not to get lost, we're going to have to drop a little bit early, right? Now this would be the range. My refinement would be this. Ideally, that would be the zone that gets tapped, but if the top of that range gets tapped, I will be very happy to take it. All right, so we're continuing. All right, now what do I see here? What I see here is that we have a buy to sell that makes this low, and the 15-second just gave a change of character. Now, my point of interest has not yet been tapped. So the way that I see this is we just created a fake or a failed change of character. This change of character bullish, right? If my POI is going to get tapped, it would require this to be taken. So very likely this would it's now generated some points of liquidity for me, right? So not only do I have equal lows on the 1 minute time frame, but I have a 15-second potentially failed change of character that could be used as my inducement. All right, waiting here. We're waiting with some patience. Tap. Awesome. So now here's what I'm looking at. So on the 15-second time frame, if we go like this would be the 15-second low that got taken. In order for a change of character on the 15-second, I need to see that go, right? So bar replay. We're still doing this. Awesome. All right, perfect. 15-second change of character, 1 minute POI. I can see an entry here. And this would be, for example, the first entry that I would consider taking. Now, in this case, I'm going to use a 2-pip stop loss. this one, right? And a 10R TP, right? By default. Let's see if price comes in. Tap. All right, so that trade is now triggered in. All right, we're still in this trade, no problem. Here's what we're waiting to see. Ideally, we now want to see this 15-second high taken. So if this gets taken, you know, we can potentially look for that secondary entry. All right, in this case, let's see what's going on here. I think I have, this would be potential entry, not yet. Actually, yes, this one would be a potential. This would be an entry. All right, so here we have a 15-second change of character. So buy to sell makes that low. This is what shifted. So this would be a secondary entry here, right? You could take one there with a 2-pip stop loss as well. And then we're going to wait for that structural high to go. Awesome. So now that structural high goes on the 15-second, you can look here at the extreme. Now we don't have a point of liquidity. In this case, the way that I did it is I took this whole level like this, and you can look for another level here to be set up for another 2-pip stop loss. Now you want to be cautious here because we don't have any inducement of liquidity for that point of interest. And so what we want to do is we want to place this in a way that we make sure that it doesn't get taken out. So that would be it. Price comes back. Let's do it like this, a little bit lower. Awesome. Point of interest is tapped. And then now we are watching price. Let's see what happens. Awesome. Another 15-second change of character. At this point, we're now creating 1-minute structure on a lower time frame. Whoops. And so now that this happens, once we take out this high, we pull back, we create another 15-second order flow range, right? This would be the second 15-second order flow range. At this moment, I've already set break even on my trades. In this case, we have 3 entries that are valid. I personally took 2 of them. Let me show you my actual ones here. Right here. Awesome. So I take screenshots of all my trades with timestamps. So here you can see at 110. This was the first entry that I showed, but I took the second one. So this was my 15-second change of character that I took. First entry here, I was looking for another entry down here if this was possible, but this was my first one. Here was my second entry with timestamp, 2-pip stop loss, 2-pip stop loss, covered the low, 10R take profit automatically set. This was my 1-minute POI, timestamp is also there, and then this was my explanation. So that's my setup. So I'm going back here. Now here's what we're doing. We're going to head back to the 1-minute time frame, and this is where we are going to manage our trade. So a couple different things we can do here. Depending on the way that you trade is how you'll have your expectations. In my mind, I have a 4-hour demand, 15-minute point of interest. We have a 1-minute change of character. We're taking 15-second demand ranges that are developing, and I have 2 entries, my personal self that I took. We have 3 entries that were valid to take. I missed 1, I took 2. And this would be a very good target for me, considering this is unmitigated. This is part of a 15-minute supply range. We have inducement. I very well can see this point of interest being respected. So in my mind, the way I see this is what I'm targeting. As you already saw in my screenshot, this is what I was targeting. And then you can see here, speeding this up. We don't come back to break even. Price goes through, runs through that. And then after that, you can see that price pulled back. And in this case, if you were very aggressive with your trading and you were waiting for a higher take profit, in this case, that probably wouldn't have worked out for you in the long run. So my tip in this case, what is something that I knew about managing this that to me was very important? The 15-minute was bearish. I don't like to trade against the 15-minute. So in my mind, if I was going to take a 1-minute entry on a 15-minute POI to go long, I would want the 15-minute to be bullish. But because the 15-minute was bearish, in my mind, the safest type of trade that I could have taken was a counter trend pullback to a 1-minute POI with a 10R take profit, right? And we captured 20R. You can go ahead and see here in the chat, this was all live. So was looking for the sell was not tapped. We're going back down here. If the 15S or 5S gave confirmation, I would consider this entry. This was the refinement. This is the 1-minute zone. We have inducement here. I go down a little bit lower and you can actually see the trades that I entered. Entry 1, right? That's the first one. Entry 2, take profit, 20R take profit, Euro US dollar London session. Let me know if you have any questions. I hope this video was helpful. I hope you learned something from this. And the markups to this are going to be in the description. And if you want to learn more and see my live trading, go ahead and join my Discord. Link's going to be in the description. I hope you have a beautiful rest of the week and catch you next time.